Okay, welcome to the to the Palisades Recovery Coalition banking Zoom. We brought this together following a number of conversations a couple of months ago where, sorry, I'm still letting people in, so I'm going to talk a little slowly so we can catch up to people. So this planning began a couple of months ago when we at the Palisades Recovery Coalition were made aware of the fact that several local banks have begun to think about, they hadn't ruled them out yet, but they had begun to think about various products that they could make available to fire survivors in order for them to be able to rebuild. And obviously, this is about a year after the fires, and we here are in Pacific Palisades, so we're largely talking about Palisadians and people in Malibu who are concerned with the Palisades fire. But this was when these conversations started. It was about 10 months after the fire, and not only banks but also survivors were beginning to understand what some of the impediments were, the financial impediments to rebuilding. Obviously, we've all heard that a lot of people were underinsured, so there's a gap between how much insurance money they have and how much money they have to build. There are timing issues. Some insurance companies, force them to be rebuilding somewhere between 18 and 36 months. There are financing issues beyond the gap that people need to be able to refinance in order to qualify for additional bridge funding. So with all of these issues crystallizing, I think that the banks got to thinking about how you provide relief to survivors. It happens that here where we are at the Palisades Recovery Coalition in Pacific Palisades, we are just steps away from 4, maybe 5 banks, which are all at this point kind of at one corner, at one intersection in Pacific Palisades. So we have Bank of America, which is relocating but opening soon. We have Chase, which burned down but is opening again. We have Citi, which is still here. And we have Wells Fargo, which is only steps away. So I reached out to the 3 major banks and I asked them if they could bring someone to the table. Around the same time, I was informed by Bank of America that they actually had a program that they were going to roll out that would help their customers. So people who hold their mortgage notes with Bank of America, they would help their customers be able to find bridge financing to build. And then when I reached out to the other banks, I realized they all have programs too. So that is largely what this is. It is a conversation about what financial tools are out there for survivors to be able to rebuild. And I will introduce to you our 4, and then the Chamber of Commerce has a wonderful chamber member, the only chamber member, I think, of all the 4 banks that are here. It's Flagstar. And so Allison reached out, and so we also have Flagstar. I will introduce to you all of our panelists in a second. I just want to let you all know that we will take questions. Please put your questions in the chat. I will curate them. We're going to give 10 minutes to each of our presenters to present. I will then formulate some questions as they go, which is what I usually do. And then we will break into Q&A. So you all know the Palisades Recovery Coalition is an organization that was stood up after the Palisades fire. We have a location here in Pacific Palisades. We do a lot, including outreach to community members. We bring them in small groups that we call charrettes. We have them, envision the recovery of Pacific Palisades, where they'd be willing to make trade-offs in order to build a more resilient Pacific Palisades. We have insurance town halls. We've had 3 of them. We'll have our 4th next week, where we talk about insurability as we rebuild. We are a recovery workplace where, architects, builders can come in, sit down, and do their work. So all of this is part of the package that we offer to Palisadians to be able to recover. So I welcome you all, and then I'm going to let you know who's on the call. We have Chris Wong, Bank of America, Martin Sanchez from Wells Fargo, Gentry Fick from Chase, JPMorgan Chase, and Allison Schweitzer from Flagstar. So I'm going to start with Chris Wong. Chris is the managing director of the LA Rebuild from Bank of America, and I'm going to give him the floor. So each of them will make a presentation, and then we can go into Q&A. Actually, I'm going to start with Martin Sanchez, because I think Chris is still making his way over. So Martin Sanchez, Senior Manager of Home Lending Customer Growth at Wells Fargo.
Can you hear me okay? Just want to check, mic check real quick.
Yep.
Okay, perfect. So good afternoon, everyone. My name is Martin Sanchez. I'm local-ish to the Palisades area, so I'm actually on the other end of the disaster and by the Eaton fire area. So in Pasadena, our family were evacuated. we were 4 blocks away. We lived 4 blocks away from where everything kind of started in Eden Canyon. Um, and so, unfortunately, we're dealing with it here on this end of the county. Nevertheless, I'm here with Wells Fargo, and I'm part of the home lending team that does outreach to customers impacted by disaster. We have a whole team dedicated to disaster assistance for our customers, in particular for those impacted by this disaster. We have a forbearance program available. It's a simple process in order to request forbearance. So maybe you probably or possibly already actively in forbearance now, or know others who are. Just to know what forbearance is a temporary pause on your mortgage payment. And the way it's designed is so that you can, and all the other banks here have the same. But the way it's designed is so that you have an ability to focus on things that matter, right? Immediate needs such as shelter and taking care of your family and eating, right? But long term, it's also focused on making sure you're able to afford other areas of housing, the rebuilding process. So the initial thing is that if you do require a forbearance, it's extremely straightforward. You just let us know that you need it. There's no forms or anything to fill out. We just call up and you ask for it, and essentially you get it, right? So we do offer 12 months forbearance, and then plus additional 90 days beyond that. If any time is needed, so that puts us roughly at a year and 3 months. So if you need additional time beyond that, which I'm sure many do, it's pretty straightforward. You just call up Wells Fargo's customer service number, our mortgage service number, to request that assistance beyond the year and 3 months period of time. Again, we want to make sure it's as straightforward and as easy as possible for those who need assistance to get the assistance. We do not need any type of proof or anything like that. Simply, we require your existing Wells Fargo customer. You need the assistance, then you get it, right? For those who are actively in forbearance and require more time, again, just call us. And then in addition to that, I would just say it's, based upon investor guidelines, but it's pretty in line with everything I said. Now, for those who are actively in forbearance now and are actively rebuilding or will start actively rebuilding, if you are receiving insurance payout, as you probably may know already, those checks are made out to Wells Fargo as loss payee. We will put it in an escrow account, an interest-bearing escrow account, and then funds will be released to you in stages throughout the rebuilding process. But as a sit in escrow, it will be interest-bearing to your benefit, to be very clear. And then, we want to make sure that it's very, very easy for you. So we have a whole team, disaster team, like I started with, is able to answer questions for you and guide you through the process. And finally, as Miriam started with, is that at Wells Fargo, we have one of our branches is still standing there in the Palisades that survived the fire. I know we've played a pivotal role in the community, and will continue to do so. So we're happy to assist you if you want to walk in a branch or speak with any of our bankers about anything. Please let us know. We're willing to be here to assist you.
Okay, thank you, Martin. And your branch is open and fully functional in Pacific Palisades. Is that correct?
That is correct. Yes.
Okay, we're going to save questions for afterwards after we hear from everybody. So Chris Wong, welcome, Bank of America. Thank you for being instrumental in bringing this Zoom together. I appreciate that. We've already introduced you at the top, but I will give you the floor. Everyone, this is Managing Director of the LA Rebuild at Bank of America. Chris, welcome.
Great. Thanks, Miriam. Appreciate the time this afternoon/evening. Similar to what Martin and the rest of the team have talked about, we offer our customers and clients a whole host of solutions The first one I'll talk about is our rebuild solution package. So for us, we were, impacted very deeply after the fires, knowing that about half of the impacted clients on the residential side, they had some sort of relationship here at Bank of America, whether it's a checking account, a credit card, or a mortgage. And so what we've done is similar to what the other banks have done here on the call, provided that 12-month in forbearance. And then beyond that, for qualifying clients, we have an extended forbearance program that will go up to an additional 2 years. So that means that you would be able to be eligible for up to 36 months of forbearance for those clients that want to rebuild. What we'll also do is starting in February, for those mortgage clients here at the bank that suffered a damaged or destroyed home, we will provide gap financing via a rebuild line of credit. And so that gap financing is a solution that we are launching again in February, and that is available to our existing mortgage holders. In terms of construction solutions, we do have that as well. So in addition to the rebuild line of credit that I mentioned, we do have a construction loan product. We do have a lot loan product as well here at the bank. So a number of different things that we can offer our clients that were impacted by the fires. In terms of financial center, ours was unfortunately destroyed in the fire, but we do have a mobile financial center set up that is fully functional. We have specialists, financial center manager there every day to take care of your needs. And we are open normal business hours, etc. So even though our financial center was destroyed, we do have a permanent mobile financial center available to you in the Palisades until our new financial center gets open, right in the Pharmacia, where the old Pharmacia was. That's going to be open sometime in 2027. So I'll pause there. A lot that I mentioned, but happy to take questions at the end along with everyone else.
Great. Thank you, Chris. And yes, I said at the beginning, our location at the Palisades Recovery Coalition is actually steps away from all the banks. And we see you, we see your trailer. Thank you for being here. I honestly did not know that it was a full service trailer. In fact, we had to transact at Bank of America and got up and drove to Beverly Hills. So that'll be word to put out there. Quick question for you. Everything that you mentioned is for residential or also for commercial clients?
That is for residential. And then on the commercial side and small business side, we do have specialists available to discuss any needs that you may have. That is, we know that, look, at the end of the day, a lot of residents, the 13,000, homes that were destroyed across Palisades and Eaton fires, those were, call it the bulk of what we focused on over last year. But in addition to that, small businesses were impacted. So we provided not only philanthropic grants of a couple $1 million over the course of last year, but we've also invested in terms of the CDFIs, $10 million. And then the YMCA in the Palisades, we just provided a $1 million anchor grant over the last couple of weeks to the local Y.
$1 million. Yes, $1 million to rebuild the YMCA. Thank you. So if you'll put on your calendar, I want to say March 12th at 10 a.m., we are convening the commercial property owners. When I say we, I mean the Palisades Malibu Chamber of Commerce is convening the commercial property owners. So if either of the three banks would like to be on that call, you can inform them of some of your products for them as well. Okay, so Gentry, so we're going to move on to Chase. And Gentry Fick, thank you so much. Regional Director of Consumer Banking at Chase Manhattan. Well, it's not Chase Manhattan, sorry, JPMorgan Chase. You have the floor.
Thanks, Miriam, and good afternoon, everybody. Special thanks to the Palisades Recovery Coalition for putting this meeting together. Just wanted to tell the story for our support over the last year. JPMorgan Chase is deeply committed to supporting Pacific Palisades and all of Los Angeles as communities recover and rebuild after these devastating wildfires. Our support goes way beyond banking. We invested over $9 million in philanthropic contributions for wildfire recovery across LA, partnering with local organizations to deliver immediate and long-term relief. Our immediate relief in banking access, we acted quickly to restore essential banking services, reopening branches and ensuring residents could access their accounts, safe deposit boxes from a safe site, and financial guidance through that crisis. In fact, our Pacific Palisades branch is being rebuilt. The ATM there is already operational, and a new branch will be opening this year on March 2nd. At 15205 Sunset Boulevard. In addition, we have a branch 3 miles away in Brentwood, 3.5 miles away on San Vicente and Santa Monica, and of course our two branches in Malibu and PCH and Webb.
This once incredibly expensive W12 Bentley has.
Sorry, I was trying to unmute to tell you I will mute everyone as they if they type in.
Okay. Great. So financial relief, we offer payment flexibility, fee waivers, short-term liquidity options for fire-impacted customers, as some of my peers have mentioned. We also were the first to provide mortgage forbearance and loan modification programs and are able to help homeowners manage financial strain and recover from property damage now and going forward. And our teams are ready to assist with insurance claims and provide guidance on available relief programs as well. In terms of rebuilding and construction financing, we provide construction to permanent loans, bridge financing, and support all rebuilding efforts. Our lending teams understand the unique risks in high fire severity areas and really work closely with customers to find solutions that are really tailored and customized to their needs, which is one of the really important things I think that JPMorgan Chase has, is we can customize based on the customer situation. In terms of small business and commercial property owners, small businesses that were affected by the fires can access deferred loan payments, working capital, and SBA-related pathways. And we've delivered over $1.5 million in philanthropic capital to small businesses for reopening, rehire, and restoring jobs, partnering with organizations like the Pacific Community Ventures and Inclusive Action for the City organizations. For local banking, as our branches reopen, we have dedicated recovery teams as well, and they're providing personalized support and answering questions. We do encourage all residents and business owners to reach out directly to our local teams for guidance and assistance. While you can get information through chase.com, always going to a local branch with folks with boots on the ground is the best way to get customized information. JPMorgan Chase employees have really contributed thousands of volunteer hours to support local organizations and the recovery efforts, and we continue to match employee donations to amplify our impact in the community. From a long-term perspective and future investment, beyond the immediate relief, we're investing in long-term solutions, including research and development of comprehensive financing strategies for wildlife recovery. So we are also developing things specific for folks that have been affected by the fires. And we're committed to helping Los Angeles prepare for future growth and resilience, supporting economic development in neighborhoods like Crenshaw through the Eaton Fire and throughout the entire region. So if you need additional help or to contact one of our recovery teams, visit our website, or as I mentioned before, speak with a representative at your local branch. We're here to answer any questions, provide resources, help guide you through every step of the recovery journey. And on the call today is our Senior Lending Manager for California, Jeff Fisher, if you have any future questions, regarding home lending. I run the branch side of the businesses, so happy to answer anything in terms of the banking side as well.
Okay, thank you, Gentry. Jeff, is there anything you wanted to add?
No, I think Gentry, well done, and it shows our commitment across multi-channels. I know we are leaning immediately towards the impacts of the lost personal residential thing, but there is businesses that were lost, and Gentry touched upon that about the small businesses that we're trying to help stand up as well. So, I think the key driver, the key message is that we are proud and happy and do and continue to work with each individual as an individual, and the resources are there if our customers or any customers need the support.
Okay. I have a question for you, gentlemen, and I've spoken to members of your team at different times over the course of the last year. Between the three of your banks, what percentage of mortgage holders do you think in the Palisades? So what percentage of people in the Palisades who have mortgages are somewhere between the three of your major banks? And I ask because a lot of the commercial property owners in Pacific Palisades happen to be Palisadians who own small buildings. Maybe they were passed down through the generations, but a lot of these people are dealing with recovery and rebuild across commercial and residential landscapes. So do you know what percentage is shared between the three of you? No, because I know like Bank of America at one point determined that they were the biggest note holder in the Palisades. So I thought maybe between the three of you, you know that you cover maybe 3/4 of Palisadians.
I wouldn't have that information, Miriam.
Okay.
We know where we sit, and I think you and I have talked before. I think the thing that we're the most proud of and happiest for the consumers is that we have less people that are asking for support, and then it's improving, it's moving past that benchmark line, and that's a really good thing. You start seeing the rebuilding, you start seeing the things that are happening out there. So,
Right.
but I have no visibility on my counterparts.
Okay. All right, Allison, I'd love to hear from you too. Flagstar, you're local, you're a member of the community, so tell us a little bit about the bank and what you offer.
Yeah, sure. Thank you, Miriam. Thanks for letting me be here today. I'm actually down in Orange County. I grew up in the Palisades, went to Palisades High School. Our house is still standing in Almedio. Dad lives in Malibu, so we've been through those fires annually, it seems like. So it was really horrible to see what's happened in the Palisades, and I really want to help get it back to what it used to be. And I'm with the private bank. We're a full, suite of products, but one of the products that we offer, and I do it myself, is construction financing. So I'm here as another resource for people that want to look at other banks as an alternative. And we've got the construction to perm product that allows you to build your home and then automatically roll into a permanent loan. What I would need from you in order to get that closed right away is your signed construction contract with your cost breakdown and your plans and specs. And we can get you closed within, 45 days. And we lend off the finished value of the home. So we're going to get a finished value based on those plans and specs. And I can go through with you what those loan to values are. But we don't charge any points. We just charge closing costs. And I'm here as a resource as well. If you want to run anything by me, I've been doing this for 40 years. Can't believe it. But really look at your financial statement and figure out what's your best alternative. Do you have a big securities portfolio, or you might want to just advance against your securities portfolio and not do a construction loan? Do you have other properties that you want to lend against? I'm here to act as a resource. I just want to see the Palisades rebuilt like it used to be, and quickly, and it seems to be progressing pretty slowly. So I'm here to help and act as a resource. Thank you.
Okay, excellent. Thank you, Allison. And I'm going to ask you all to put your contact information into the chat if you'd like. I mean, presumably you'd like, but please put your contact information into the chat so people can reach out to you. And then Allison, you brought up something that I want to ask, and that is insurance. So there's a great deal of conversation around the Palisades about insurability. Obviously, people would like to rebuild. As I think you all know, there are 500 permits already for the rebuild. There are at least 300 properties in Pacific Palisades that have broken ground and are rebuilding. We believe, and there's data released by the Department of Angels. There's our own data that we take here at the Palisades Recovery Coalition. Our Pacific Palisades Community Council just had a professional survey done with NORC. It all points to this idea that the lion's share of Palisadians would like to build back and come back. The question is insurance and insurability. So as you guys look towards construction loans, or as you look to enable people to be able to build back and come back, does insurability factor for you? Do you wonder whether your assets, the homes that are being built that you're loaning money to, do you wonder if they'll be insurable? And if you do, are your teams in Washington, D.C. or in Sacramento working on legislation that would ensure that our homes can be insurable?
I can address that. I mean, we're not actively working on that through DC, but we would lend on the home at inception based on course of construction insurance. And then ultimately, when the home is complete, we would get general liability insurance or homeowners insurance, excuse me. So
okay. But on the front end, you're not worried about insurability or the affordability of insurance?
We are worried about both. I mean, given what's happened in the Palisades and Malibu, that's going to be a huge concern. And so we would work with the homeowner to find the best, source to be able to provide that.
Okay. And then Chase, where do you stand on insurance and insurability?
Well, excuse me. So Miriam, I think, the questions, it's layered, right? I think everybody, especially in California, throughout California, is focused on the insurance impacts and the changes that are happening, right? We're seeing resort communities have pressures. We're seeing it's beginning to be more prevalent than it is a kind of a unique circumstance. I think everybody is continuing to work on this and think of ways and how this is going to be in the future and what it's going to look like. I know that, when you talk about Washington, D.C., you talk about Chase, we are at the table in many, many conversations, both at state and federal level to work.
Sherry?
Sorry. I thought I had muted everyone. Go ahead. At the state and federal level.
With the ability and the intention to work on a better tomorrow. Right, building back better. When you talk about the concerns about rebuilding and those types of things, I mean, there's always a level of risk with any type of lending, any community. I mean, things happen. Whether you're in Florida, Texas, California, Colorado, it really doesn't matter. But what I will say is, we're leaning as a regulatory lender, we're leaning to support what the rebuild efforts need to be. And what I mean by that is, like, we're not going to dictate that you have to have a hardened home, but the certain cities and communities may, right? And we're going to support that. And I think that, aligned with the GSEs, which for those on the call that don't know what that is, it's the government agencies that do the insuring or purchasing of a lot of the transactions that are done. We follow their suit. We work closely with them, and we're committed to doing what needs to be done in order to make sure that we have a future for California and the rest of the country. So hopefully that answers most of your question.
Yeah, it does. We've been holding a series of insurance town halls. Again, we're going to have our fourth one next week. And much of what we talk about is risk assessment. And in communities like ours, where people are rebuilding, most of this community is going to be rebuilt to current code, which is considerably more fire hardened than it was before. So we should be very insurable, yet risk assessment models look backwards, not forward. So I wondered if banks could be our ally as we go out to advocate in Sacramento that risk assessment look ahead and not backwards. Any of the other two banks, Bank of America, anything around insurance or insurability concern you as you lend for reconstruction?
Miriam, I'll jump in. I'll echo what Allison and Jeff mentioned. I mean, it's well stated in terms of, look, we all are concerned, not just from a bank perspective, but even residents, right? Living in, California, living in the LA area, Orange County. So, for us, it's, about advocating the need for a vibrant insurance market to not just the insurance companies. So, for example, Farmers, Mercury, et cetera, but also to the governor's office and the state, and making sure that, we have to get that fixed. It's not gonna happen overnight. That's the reality of it, but need to continue to advocate for that. And then the other thing that I would just mention, from a construction perspective, the need for builder's risk insurance is something that, every construction project requires. And that's something that, for homeowners, that's different, right? Meaning that like we don't typically think of builder's risk insurance and the need there because we typically think of auto insurance, property slash homeowners insurance. But when you do a construction project, you do need builder's risk insurance, and that's part of the education that we're providing our clients as they go through that process.
Okay, excellent. Thank you, Chris. Martin, anything from Wells Fargo?
Yeah, Miriam, thanks. So first of all, Wells Fargo blocks chat on Zoom, so I cannot put my information there, but I did email you just now. If you could drop my email into the chat, and everybody on the call can have it. So thanks. In regards to insurability, very similar to what everyone said, kind of reinforcing that, we want to make sure our customers can rebuild. That is within, city guidelines, state guidelines, but we're not going to put any overlays or kind of add anything additional to that. So if they require you to do, soil samples or hardening the perimeter, whatever it may be, that's not something we're going to mandate. It's something that's going to come more so from the city. Now, in regards to advocating in Washington or in Sacramento, that may be a good opportunity to work with our trade association to make that. If you would like an introduction to that, send me an email and I can connect you with our government relations colleague.
Okay, perfect. Thank you. Okay, I'm going to open it up to questions. I think I had one question left for you, but it'll come to me. So I'm going to open it up to questions from anybody from the audience. I guess I still have a quick one. If you're, so this came to me actually a few months ago from a very prominent member of the Palisades community. Some post-fire, we noticed that some loans were being sold to secondary servicers, right? So those are presumably off your rolls. So one of the questions that arose was, are the major banks looking at Palisadians who are asking for forbearance and assuming that those are risky notes to hold and that you're offloading them to third-party servicers? And then I guess my follow-up question is, once you've offloaded a client's mortgage to a third party, all of your forbearance products that you've listed here or that you've talked about here no longer apply, right? Then at that point, it's that third party loan servicer that has to extend the forbearance, correct?
Okay, I'll jump in. Although this does not pertain to Wells Fargo, I can still partially answer the question, Miriam. So we, Wells Fargo, we're not, service transferring any of our mortgages. Regardless that when it comes to risk being a riskier loan or what have you, that doesn't play out to. So this is not a scenario for Wells Fargo. I can't speak for everyone else, but what I can say, if that were to be the situation with another lender or with another servicer, they would still have to follow the investor guidelines that are originally in place. So if Fannie Mae or Freddie Mac own the loan, regardless of who's servicing the loan, they would have to follow those guidelines. And so nothing really would change because it would be based upon investor guidelines.
Okay. Any of the other ones, do you look at your fire burn zone loans in a different way? If they ask for additional forbearance, does that make it a riskier loan? Or are you likely to sell it off?
So I'll speak. So first of all, Martin hit it dead on. No matter where the servicing goes, it is aligned with the GSE of the initial investor. So I think he did a really good job explaining that. I think the second component is because there's a fire or because there's a victim of a fire does not change our approach at all, right? That's not a driving factor. Now, multiple other things can happen with that customer's desire or the need for their loan. But there's nothing that I've heard of personally that I've experienced where that's being part of the case.
Okay. And anybody else? Okay.
Same thing for Bank of America.
Okay. So you're not offloading Palisadian mortgages?
Nope.
That was essentially the question. Okay, great. All right. Questions from the floor? Anybody with any Kashma, go ahead.
Shama, hi. Yes, I have a Wells Fargo mortgage that I've had for about a very long time. And I've received insurance proceeds, and essentially Wells Fargo is making it very difficult to access said funding. They released about 1/3 of that initially, and then additional funding, additional release of that money is contingent upon inspections. But when you have a destroyed home, you need to hire an architect, you need to get permits, you need to do all of these pre-construction elements that require funding. And they have stated outright that they will not give any additional funding from my insurance proceeds unless I've hit 25% complete. And that 25% complete is, I've yet to find a document with how they define 25% complete. So I want to just address that because that's a big deal. I also had an appraisal done on my property in November, and my property value is secured collateral at more than my mortgage value. So, obviously I'm only getting 2.5% on that restricted escrow account, whereas Wells Fargo can make 5% plus on a treasury bill. So I find that Wells Fargo, and I don't know if the other banks are doing this, but I know that Wells.
So your question, I think it's in the chat.
My question is like, my question is, what is the incentive? Wells Fargo is not making it very clear. It's not helping mortgage holders release insurance funds to them in a timely manner. So I want to understand.
You're getting your insurance check. You have to deposit it in an account where they hold an escrow.
Yes,
you have
the
to
restricted
prove that
escrow.
You're 25% complete before they release it. Okay, so let's just distill it to a question so Wells Fargo can answer. And if they can't, then you can get in touch with them. But Wells Fargo, so insurance pays out a check, as we've all become familiar. We have to deposit that with the lending bank. And then you monitor how the rebuild progresses before you release?
In general, yes. But in this particular situation, the best kind of go forward strategy would be if you can send me an email directly. My email should be in the chat now.
It is.
Okay.
And we can connect separate from this. And as soon as I get it over, I'll make sure to escalate it to the team and have someone reach out to you and understand what's going on.
Excellent. So essentially, I think you're sharing something that other people have too. You're saying basically that you need the money to continue your rebuild and it might be slow. So that's probably an issue that many people will face.
Oh, I don't want to minimize it, Miriam, to be honest, because this impacts cash flow is important for people as they continue to rebuild.
We understand.
And insurance proceeds that are given to an individual, that are, yes, the mortgage holder is signed, is also written on the check. Unfortunately, it's to their discretion. And I find that there needs to be more light on this, because that affects people's ability to rebuild fast or slow.
Right. I agree with you. We understand. And I think that, we've said this about almost every facet of this recovery. As it progresses, new issues will come to light, and they'll start with somebody, and then we'll realize that they're real issues that we try to resolve ahead of the game. That's something we do try to do here. And I'm sure at other organizations, we start to look ahead and foresee what some of the peril is and try to resolve it. And this is definitely going to be one of them. So thank you.
And I'd like to just say, like, the peril is that their incentives are aligned in this case to hold on to the money as long as possible to make money on the float. So I just want to make that a point, right?
Okay, so we're going to move on, but their incentive is also to make sure that their customers build so that their customers can get on Zooms and say, hey, this is going well and I'm rebuilding. So I think there are competing interests, and I'm sure that you'll come back and tell us how it got resolved. It will be an issue. I appreciate it. Those payouts will be an issue. Thank you. So I think this is different for every bank, but the question is, when forbearance ends, is it a balloon payment at the end, or do you fold it into the remaining payments of the loan? What interest rates will it be? Is it different per bank, or how do you treat forbearance once it ends?
I'll speak for us, Miriam, for JPMorgan Chase, and I'll go back to what I said earlier. It's an individualized discussion. When you get to the end of that, if you need to continue, then that's where we want to have that individualized discussion with our customers, making sure that they call in, not post, but during and pre, and set up the next step of their recovery journey. So there isn't really a peanut butter spread that we can say that's just unilateral across, because every customer's needs and every customer's desires are different. So yes, on both your questions, can it be a balloon payment? If you want it to be, can it be amortized out? If you want it to be, can it be added to the end? In some cases, if you want it to be, it's just really what suits the best for you. And then also whoever the investor is on that transaction, but it is specific to the individual.
Yeah, and what I'll add on to what Jeff mentioned, and I'm sure it is, for my peers at all the other banks, we reach out to the client, at least 30, 60 days beforehand to walk them through that process and collect any necessary documentation, and walk them through those options so that they fully understand, what's ahead for them. So, Jeff hit the nail on the head.
So you're proactive, you reach out in advance. Okay. Wells
Yes.
Fargo, same. I assume it's different for every client.
It's absolutely same answer. Yes.
Okay. Are there financial or lending, bridge financing, loans or services available for people who don't have a mortgage with your bank? And that was a question that's come up before. Are these products that you're rolling out only for people who currently hold notes with you? Let's start with Chris.
For the mortgage forbearance, similar to all my peers, the forbearance is only for our current mortgage holders. So just want to make sure we level set on that. And then in terms of the construction product, it is open to new or existing customers.
Okay, great. Wells Fargo?
Yep. For forbearance, yes, it is just for our existing mortgage holders. In regards to construction, we do not offer construction financing.
Okay, and then Chase.
I mean, similar, and just point of clarification, in order to create forbearance, we have to be the note holder. It has to be a customer of ours. There's no,
Of course.
yeah. So
The question wasn't around forbearance. It was the other products that you bring out for bridge financing or construction loans. Is that just for people who already hold their note with you, or are you taking new clients?
Similarly to Wells Fargo, we don't currently offer construction ground up financing, right? So, but any customer can apply for a HELOC or any other product that we have. And not just a Chase customer, anybody can apply for any product that we have if it suits their needs.
Okay. Reverse mortgages. As far as lending share, there were 250 reverse mortgages that were in the Palisades and Eaton fires. Out of those, I think there were 300 in Pacific Palisades. That's the statistic I got. Out of those, 100 had already completed their claims in September. Justin, is there a question around that?
Oh, I was just I'm Sean. I'm Justin's brother.
Hey, Sean.
But I was just you guys were talking about market share, and as far as total number of reverse mortgages in those areas, yeah, probably like 333. As far as what our industry is tracking, there was 250 that were affected and were filing claims. So yeah, as of September, 100 of those had already been fully resolved, and the rest were still in process. So I just wanted to share that. I also have some information from our industry and the CFPB on things to look out for if people have reverse mortgages already and are looking for assistance in like how to navigate all that. But we're probably going to be very similar to how other banks process their insurance claims process. So yeah, if anybody needs that as a resource, just wanted to offer it up.
Okay, well, you're welcome to put the resource into the chat in case it's useful for people.
Okay.
Okay. Okay, so if anybody has any more questions, please either drop them in the chat or raise your hand and let us know. Okay, if not, we're going to let you guys go. So Wells Fargo is already operational in Pacific Palisades. Chase is going to be opening on March 2nd, I believe. And Bank of America is fully operational out of a trailer, but you will be coming in. Did you say 2027, Chris?
Yeah, because we just signed the lease, Miriam. And then we're going to refurbish that existing building there to fit more of the financial center layout that we're aiming for.
Okay, wonderful. Well, thank you all so much for being on the Zoom. I really appreciate it. Allison, any last words you'd like to share? Anything, any wisdom you'd like to share from a small bank point of view?
Yeah, I'm here to help. You know, I put my number in the chat. Call me with any questions anybody has, and I can help you navigate what I think is the best solution for you.
Okay, great. Thank you so much. Thank you.
Thanks so much. Bye-bye.